Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because last night's election outcome has given us a lot more clarity on what Bitcoin cycle scenario is most likely going forward. Now, full disclosure, I'm actually surprised Bitcoin isn't trading significantly higher after last night's election result, maybe because the market has been pricing this in over the past few weeks. We did see Bitcoin briefly touch 75,000 last night as it began to look very likely that Trump was going to win the election. But ever since, we've really been struggling here at the previous all-time high, and of course we still have quite a bit of time between now and the weekly close, and we do have a pivotal FOMC meeting tomorrow, but it is surprising that we're seeing as much sell pressure as we've been seeing over the past few hours or so, and that we're not seeing Bitcoin get a very clear break above 74,000 quite yet. Now, this is a bit bittersweet because we have been following the election, especially via Polymarket for months now, and we got more and more confident as Trump began pulling away in October, and it looks like the people betting on Polymarket with their money weren't so dumb after all, and they ended up being quite correct on the election outcome. And now this brings up an interesting question. Trump began pulling away on Polymarket towards the beginning of October, and Bitcoin is up about 25% since then. And of course, I still think Bitcoin is going to do very well over the medium to long term, but is everybody getting a little bit too overexcited on an event that likely has been priced in over the past few weeks and months? Bitcoin is very known for having corrections and pullbacks when everybody starts piling in thanks to a major news event that perhaps the market has priced in previously. And perhaps tomorrow's FOMC meeting could be a catalyst for that, but it's clear that the short cycle scenario and easy cycle scenario did go up quite a bit in likelihood based on Trump's win last night. And now we just have to wait for the second major variable, the Fed's monetary policy decisions, to see what type of cycle Bitcoin is going to have. The short cycle scenario was most likely to me because we were expecting a Trump win on this channel and we're expecting for the Fed to start doing QE within the next few months, but perhaps we see some recession fears and macro uncertainty in the Q1 to Q2 of 2025 timeframe that could result in a local top as everybody front runs 100K Bitcoin. But if those recession fears end up not playing out and the economy actually flourishes next year, and we have that Trump victory aligning with the Fed easing monetary policy, that's what could result in the easy cycle scenario. But based on the current economic data, that scenario is still a bit unlikely for me. Now, what's perhaps a little more likely is a possible shakeout that we see over the next few weeks that could perhaps be catalyzed by tomorrow's FOMC meeting, or maybe some profit taking after all of the FOMO we've seen with last night's election win for Trump. So it wouldn't surprise me whatsoever to see a pullback or shakeout to punish a lot of the leverage that I'm sure has been piling in up to this election outcome, and definitely ever since we saw the likelihood of Trump winning increase significantly last night. And finally, the broken cycle scenario. This would require the economy entering a very bad recession in the very near future, and that's something that I believe is just very unlikely as of right now. And we did know that Q4 would be volatile going into it, and that November sets the trend for Q4. So we're going to get our answer to this question very shortly, because whatever we end up seeing as the outcome for November, once this election and pivotal FOMC meeting is behind us, it's likely going to set our trend for December and going into early next year, because that's what we've seen each and every time for Bitcoin going back almost 11 years. Whatever we see in November, we end up seeing a follow through in December going into the end of the year. Now, the other side of the coin is the fact that we're still seeing global liquidity down, and we know that Bitcoin can ignore global liquidity in the short term, but for the past two major mania phases, we did see global liquidity going higher, and one of the main drivers of global liquidity that is causing it to go down right now is what we're seeing with the US dollar index. It struggled at resistance for about 2 weeks, got a very strong bounce off its moving average, and as of right now is rallying higher quite aggressively towards our risk-off zone. And Bitcoin can ignore this in the short term and slowly grind higher, but I have a very hard time envisioning a major mania phase unless we see the dollar index roll over and drop aggressively. And funny enough, so far we're seeing price action very similar to 2016, where the US dollar index went up towards the end of the year and then rolled over aggressively starting in early 2017, and the equivalent this time around would be 2025, which funny enough comes right after Trump's inauguration, so maybe we'll see some kind of positioning around that major event. But as of right now, I remain cautiously optimistic. I'm positioned for upside, but I'm not getting too overly excited until we see that rollover in the US dollar index. And that's also when we've seen those spectacular alt seasons as well. And we haven't quite seen those early signs of the dollar index rolling over quite yet. And the timing couldn't be better because FOMC meetings tend to have a large impact on the US dollar index, and we do have one happening tomorrow. The expectation is 25 basis point rate cut, but the real elephant in the room is whether or not we're going to see the Fed go back to quantitative easing and expanding their balance sheet. Even though they have begun cutting interest rates, they have still been doing quantitative tightening and reducing their balance sheet, and that has been putting downward pressure on global liquidity ever since about the beginning of 2022. And we know what happened in 2001 and 2007 when the economy weakened significantly. The Fed began cutting rates too late after an intense rate hike and rate pausing cycle, and we saw risk assets like the S&P 500 sell off aggressively. We really don't want to see that happen this time around, and whether or not the Fed decides to start doing QE sooner rather than later will have a large impact on that outcome. And that brings us to the main driver of the Fed's monetary policy, economic data. We're going to take a look at inflation and what's happening with the labor market, because the Fed has two mandates: stable prices and low unemployment. And if we look at what's happening with Truflation, our leading indicator for inflation, it's been going up quite aggressively ever since the Fed did that 50 basis point rate cut in September. And this is not a great sign because this tends to lead what we see with PCE. And yes, it's great that PCE has gotten quite low to 2%, but if Truflation is right, and they usually are, we're expecting a bounce in PCE quite soon, and we would perhaps see that carry over into core PCE as well. And that makes it a little bit harder for the Fed to start QE immediately, and it limits how big of a rate cut they can do as long as inflation concerns remain elevated. Now, 2.6% isn't terrible whatsoever, and it's nothing compared to what we saw in the beginning of 2022, but definitely an early warning sign that we're seeing inflation increase recently, and I'm expecting it to start carrying over into PCE and CPI quite soon. As for the labor market, we haven't gotten any updated data quite yet, but we are getting an update to initial jobless claims tomorrow. We're still quite below cycle highs, and we're way below recession starts, so we haven't really seen any concerning signs in layoffs. If we take a look at continuing jobless claims, we're at our cycle highs for the number of people who are remaining unemployed, but still below the recession start average there as well. Now, perhaps the most concerning economic data is that we're seeing the unemployment rate go sideways here and putting in what looks to be a higher low before its next potential move higher, and perhaps non-farm payrolls could be an early warning sign of that, because we're very close to crossing over into losing jobs on these non-farm payroll prints. Now, it can bounce around quite a bit. This is a very volatile data set, but historically, the major recession warning was falling below the zero line on non-farm payrolls. We haven't seen that quite yet. The last reading was 12,000 new jobs, a lot of which were government jobs, but we'll have to continue monitoring this data set going forward. As of right now, doesn't look incredible, but could still bounce around and go sideways here for quite a while before actually falling through. These data points tend to move a little bit slower than things like initial jobless claims and trueflation, so we're just going to have to monitor that as we go. As for traditional markets, we've seen quite a strong bullish move in the S&P 500 today following the Trump win. The correction we've seen for Bitcoin over the past few days was happening alongside the S&P 500. Those tend to be a lot less stressful because it usually means the correction is macro driven. So we had a strong feeling it was likely just short-term noise. So it's not surprising we're seeing the S&P 500 recover here now that we have a little bit more certainty on who the next president is going to be. And usually the S&P 500 doing well is a very important backdrop for Bitcoin. With Bitcoin being further out on the risk curve, we really want to see the S&P 500 doing well so investors feel more comfortable taking additional risk with a asset further out on the risk curve like Bitcoin. Now, this upcoming weekly close will be very important. If the candle closes anything like what we're seeing right now, it would be a confirmed bullish breakout out of our range, something we've been waiting for since March of this year. And I would have to expect short-term upside if we were to get a weekly close above 72,000. And if we were to close below that level, that would be very concerning, but that looks unlikely as of right now. And the way I'm handling my positioning for this is I'm just keeping the majority of my investing in safe spot holdings, not going super far out on the risk curve quite yet for altcoins. Very comfortable knowing I have the cash position I do, so that if there is some opportunity, I'll be in a position to take advantage of it. But as of right now, happy with my current positioning and don't feel the need to pile in here now that I'm seeing so many investors euphoric over the Trump victory. And we're finally seeing Bitcoin trading into the region I have laid out as the expensive region, not because that means we should sell everything because Bitcoin is expensive, but it's more the fact that I'm not excited to buy Bitcoin above 70,000 because I think the upside is quite limited compared to the prices we purchased at earlier this year and in 2022 and early 2023. So for now, we can just happily sit on our existing positions and ride this rally higher if it continues and wait to see if we get some good opportunities going forward. And with Bitcoin trading at 74,000, the likelihood that we go back to the low 40Ks is becoming more and more unlikely each and every day. Definitely not impossible, and I'm looking forward to making a new version of this chart for 2025 once we enter the new year. But so far, it looks like we were quite spot on when we first released this chart in the beginning of May, when we said it was very likely Bitcoin would go below 60K. We said it was possible Bitcoin would revisit 50K, and we said it was unlikely Bitcoin would revisit the low 40,000s. And so far, that has been spot on with less than 2 months left to go in the year. But we'll continue to monitor it. I've seen Bitcoin do crazier things, but I still think it's very unlikely we're going to see those low doomer prices that people have been calling for months now. And as always, looking forward at the longer term, we're still expecting the federal government to run massive deficits. I mean, we're seeing all this stuff about the Department of Government Efficiency with Elon and reducing government spending. We'll see if any of that ends up playing out. But as of right now, I'm still expecting more government deficit spending, just like we saw last year and the year before that, because they're using that government spending to keep GDP positive and avoid the economy going into a technical recession. And that government debt has to get monetized eventually, which is why we see such a strong correlation between national debt and the S&P 500. And we're expecting the money supply to increase the same way we've seen an increase in government debt. So we remain bullish risk assets like the S&P 500 in the long term, and we remain very bullish fixed supply risk assets like Bitcoin in the long term as well. But as always, let me know what you expect. I remain very optimistic over the medium to long term. The path in the short term is a bit hard to figure out, but perhaps the FOMC meeting tomorrow will give us even more clarity, just like last night's election result did, and we'll see what ends up playing out. But the short cycle scenario is still the most likely one in my opinion, but that can definitely change if we get some data or price action that completely disagrees with that view. As always, let me know what you expect, which of these 4 outcomes is the most likely in your opinion. Would love to hear from you, and as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.